This is the Friday, June 14, 2019 version of the Market Plus segment. Joining us is Mark Gold. Mark, welcome back.
Nice to be back.
All right, Mark, we've got some really good social media questions this week that I think will help us unpack some of those discussions we started to get into on the main show. Starting out here with Bill in Armenia, North Dakota had a good question he sent in. He said, how low do soybean acres have to go to finally move the market?
Well, certainly 5 million acres would go a long way to helping things out. You'd be talking about 300 million bushels of beans. That takes you down to a 700 carry out. If you have a yield drag on that, now you're talking about maybe a 500 million carry out. That's something you can handle. Hopefully Brazil will have a tough season, and that gives us more hope out there. The Chinese did buy some beans this week, so they're still in the market. But I think it'll take 5 million acres. But I think it's important here is that you've had an opportunity both in the beans and the corn, as we've talked about many times. Farmers get an opportunity one time at least every year to sell grain at profitable levels. Well, guys, you got it in the corn, and as far as the beans go, at $9.30, $9.40 new crop beans with the government payment, you're profitable. So you want to do some marketing out here, and hopefully we can see prices go higher, but there's still an awful big carryout out there.
There is. So I think that's really the question of, will we see the soybean market rally even with weather because of that carryout number?
Well, the funds still have to get out of the last of their shorts, which I think they're getting pretty close, but they're still short a lot of oil. We don't know how bad the soybean problem is, and we don't know what the yields are going to be. And we'll get a clue of that with the production of the acre numbers on the 28th. But I've never seen a year like this. And can it be a lot worse than people are thinking? I believe it can. I think a couple of mistakes that guys will be looking at is right now, December 2000 corn is trading at a discount because everybody thinks we're going to increase corn acres 10 million acres because of what's happening here. Everybody wants to join that bandwagon and sell 410, 415 December corn. I wouldn't be in a hurry to do that. I'd be in a hurry to put a put underneath it. But when these markets tend to turn, they tend to turn, and the things you think may happen in the future don't happen. You get everybody short, and now you run them in at some point. So I think you need to be very careful on both new crop beans and 2020 corn and beans.
Okay.
Getting too ahead of yourself.
That sets us up very nicely for another social media question here. Flinton in Zimbrota, Minnesota. He said, will this weather market carry over into 2020 crop year, or will analysts just assume we'll plant 100 million acres of corn with the record yield and we will be swimming in corn?
Well, let's hope the American farmer is smart enough not to go right back in the same soup they just got out of. So, I'm hopeful they don't. Beans have kind of been the stepchild of this rally because carryouts have basically tripled. I think we're going to start working on that number. If Brazil has a bad problem, all of a sudden now beans get attractive. If we go back to a normal corn-soybean relationship, which tells me the beans should probably rally relative to the corn in order to attract those acres and keep them from going in corn. So again, I don't want to get too far ahead and have guys selling 2020 crops, corn or beans. Yeah, having a put on it's fine and necessary in terms of risk management, but don't spend a lot of money. And I believe both have a pretty good chance of rallying. I think the conventional wisdom is go sell 20 and 21 at these prices. Well, when these markets tend to turn, and we've had this base that we've built for 4 years here, and we start to come out of it, things tend to keep going in that same direction for a while. So, I'm friendly to this corn market and the bean market. I think, as I've said many times, Mother Nature takes care of surpluses and she takes care of deficits. And she is certainly working her way to doing both of that in the corn and beans this year.
Yeah, this weather market, might be a blessing in disguise for especially the soybeans.
We've got to do something to whittle down those stocks. Hopefully the president will get a deal done with the Chinese at some point. I don't think we'll see it at the end of the month with this conference. We don't even know if the Chinese president, is even going to go there. The president claims he's going to put more tariffs on. If he does, that can be a soft spot for the market. But I think the pros, we had a good setback. I think it was early in the week, and the market was bought down there. And I think it's the same thing. 30-cent breaks in the corn will be bought, 50-cent breaks in the beans will be bought. We'll probably get them. But longer term, I'm still friendly to these markets.
I want to talk about the Chinese situation just a little bit here, because we had an announcement out by China this week that they will follow through on that promised purchase of 7 million metric tons that they have left to fulfill, but they're delaying it even further. If they don't ever make this purchase, or they keep punting it down the field, so to speak, what's that going to do psychologically for the soybean market?
Well, it doesn't help it. I don't think anybody's really counted on it. So it'd be nice if we get it. It'll be a supporting factor for the market. If we start seeing some good export numbers, 300, 400, 500, maybe even 1 million metric tons go out the door at some point. But I don't think the market's counting on that now, and I don't think that's the bullish influence in the market. I believe the bullish influence is strictly a weather deal, the funds being short, covering those. That's what's moving this market.
It's really taken a back seat, it seems like, at this point, the Chinese story.
It has. We haven't really heard too much about it. The president, wants to apparently get a deal done. Hopefully he will. Hopefully the Chinese don't do what the North Koreans did and shoot their negotiating team. So hopefully we'll get something done out here.
Yes, hopefully that would be the case, and that would definitely spark some excitement, especially in the soybean markets.
Yes.
Another question here we've got from Roger in Kokomo, Indiana. He said, I sold some old crop corn at $4.50 earlier this week. The local ethanol plant bid is at $4.65 this Thursday morning. How high can old crop go? And I want to throw in there too, Mark, why is old crop corn rallying when it's new crop corn that's maybe not been planted yet?
It's that conventional thinking that gets people in trouble. They see a 2.5 billion bushel carryout in old crop. Why would old crop ever rally? Because everybody's short it, and there's a squeeze, and people need the grain, and it's not coming out of the farmer hands. In my opinion, if you've got old crop, you need to be laying it in here, sell as much as you want, whenever you want, do it in the next 2 weeks till we get to the end of the month, lay in a little bit every day to the end of the month. Every time you sell 5,000 bushels, buy a callback. Keep the upside open through the summer. This marketing game doesn't have to be tough, but once you sell this grain, you're getting a dollar rally. Spend 15 cents of that and buy a call option and get rid of this risk. The market's giving you the opportunity. Take advantage of it and sell something. How high can it go? Nobody really knows. Is the squeeze on in July corn? Hard to believe with a 2.5 billion bushel carryout there's any kind of a squeeze going on. But it is what it is for the time being. Take advantage of it. If July corn gets anywhere near 280, 290, I'd be out of it, buy a $5 call, and keep the upside open in case something that really gets waggy out here.
Okay. I pushed you pretty hard in the main show about, is corn going to hit $5? But I also want to offer you the option, Mark. Are we nearing a peak in this new crop corn market rally? I
don't think new or old yet. In the last couple of days, the new crop is the old crop is certainly taking the lead. Again, why? Because because everybody's short the new crop, because there's so much there. They've been buying these, selling July, and they're getting caught with it. But as we said, markets tend to make their high the last Thursday or Friday of the month. I don't think this month will be really any different. And when we get to that point, what's that number going to be? I don't know. Is it going to be $4.80? Is it going to be $5? It's going to be $5.20. I don't know. But I'd be selling some every day. And when you sell 5,000 bushels, turn around and buy a call option and keep the upside open. And the new crop, until we know where we stand with this crop and what kind of condition it's really in and how many acres are out there, you've got to keep the upside open out here. This thing could just be getting some steam behind it. And if it really starts to roll in the funds, they're only along 125, 150,000 contracts. If they want to go to 300 and 350,000, you can tack another 50 cents onto this market, no problem at all.
Another 50 cents.
You could, if the funds want to get long in a big way, we could see another 50 cents.
Okay, and that's for the soybean and corn markets, not necessarily wheat?
Yeah, I think both of it.
Okay.
All three of them, actually. I think there's more upside potential through the end of the month in all three.
Okay. Mark Gold, thank you so much.
Thanks for having me, Delaney.
Join us again next week when we'll explore how one Midwestern state is expanding its housing stock in rural locations, and Naomi Bloom will join us at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.